Hey everyone, welcome back to Corporate Decoder, where we dig into the juicy details of company filings so you don't have to. And today we are looking at a company that seems to be splitting hairs and pieces quite literally. Let's see what that means for investors. This is a Form 8K filing from M3, Brigade Acquisition VI Corp, or as we LL call them, the company. Now what is a Form 8K, you ask? Think of it as a company's way of quickly telling the public about major events they are not required to wait for their regular quarterly or annual reports to share. It is like a breaking news bulletin for the corporate world, and on the 16th of October 2025, the company announced something pretty significant about how its investors can trade their shares and warrants. If you are into special purpose acquisition companies or SPACs, you'll want to pay attention. So the big news here is that the company is allowing holders of its units to separately trade the individual pieces that make up those units. That means if you own a unit, you can now break it apart and sell the share part and the warrant part on their own. Currently, the company's units are traded on the Nasdaq Global Market under the ticker symbol MBVI. This is what we call a unit comprising of one Class A ordinary share and 1/3 of a redeemable warrant to buy another share. Think of it as a bundle deal. But here is the change: starting around the 17th of October 2025, investors will have the option to separate these bundles. The Class A ordinary shares will trade under the ticker MEVI, and the warrants will trade under the ticker MEVU. This is actually a pretty common move for SPACs after their initial offering. It gives investors more flexibility. If you believe in the future of the company and its stock, you might want to hold onto the shares. If you think the warrants have potential to gain value as the stock price rises, you might want to focus on those. Just a quick reminder about these warrants: each whole warrant can be exercised to buy one Class A ordinary share at a price of $11.5. This means if the stock price goes significantly above $11.5, these warrants can become very valuable. However, it is important to note that no fractional warrants will be issued when you separate the units. Only whole warrants will be available for trading. So if you had a unit with 1/3 of a warrant, you won. T get a partial warrant, you. L only get whole ones if you accumulate enough those fractional pieces. To actually make this separation happen, investors will need to work with the company's transfer agent, Continental Stock Transfer Sabi Trust Company. So it is not just an automatic button press. You have to go through a specific process. Now, typically in a Form 8K, we might not see extensive financial statements, but this filing does point us to an exhibit, which is a press release dated the 16th of October 2025. This press release is where the official announcement of the unit separation was made. Essentially, this 8K filing is here to officially log that announcement with the Securities and Exchange Commission. Looking at the signatures section, Eric Greenhouse, the Chief Financial Officer, is signing off on this report. This tells us that the financial leadership is aware and approving of this action. It is a procedural step to ensure everything is properly documented. So what is the takeaway here for investors? M3, Brigade Acquisition VI Corp, is making it easier for its investors to trade the different parts of its units. This increased flexibility can be a good thing. It allows investors to tailor their investments more precisely to their outlook on the company's future. For those holding units, this essentially unlocks new trading opportunities. For the company, this move is often a signal that they are preparing for the next stages, which for a SPAC typically involves identifying and merging with an operating company. The market will be watching closely to see what target they will pursue. This separation of units is a step towards greater liquidity and transparency for shareholders. It separates the underlying equity from the potential upside that warrants offer. It is a strategic move to cater to different investor preferences and potentially widen the pool of interested traders. It signals a transition point for the company, a move from being just a shell company waiting to find a target to a more actively traded set of instruments. The success of these individually traded shares and warrants will heavily depend on the company's ability to secure a promising merger target and the subsequent performance of that merged entity. The exercise price for the warrants at $11.50 is a key point. It means that for those warrants to be profitable for the holder, the stock price of the acquired company needs to significantly exceed that level. It emphasizes the speculative nature of these warrants as they are designed to profit from substantial future growth. Alright, that is our look at M3-Brigade Acquisition VI Corp. As latest filing, what do you think about this unit separation? Are you excited about the new trading opportunities, or do you see potential risks down the line? Let us know in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more corporate decoding. And don't forget to join our Discord community, linked in the description, for more discussions and insights. Thanks for watching, and I'll see you in the next one.